What is up, guys? Welcome back to another video. So today we're going to be looking and back testing some macro times during the New York AM session and some PM sessions, and we're going to show you how to trade these specific macros in the AM session when we're trading the index futures, NAS, US 30, and the S&P. So let's get into it. So some rules are, we are going to want a higher time frame PD array. Then we're going to want an lower time frame change in the state of delivery. Market structure shift. And some sort of PD array to enter on the lower time frame, and we're our target. Then we're going to also want SMT and target the opposing liquidity. Okay. So boom, that is everything you'll need. So higher time frame, we're going to want a 1 hour or 15-minute PD array. And then we're going to look at 5-minute or 1-minute CISD, market structure shift, and SMT. Okay. So these are all the things we're going to be looking for. So if you need to, pause the video, write these down. Okay. So here we have a 1 hour fair value gap, and we have our 950 to 1010 macro. Okay. So we're going to be waiting for price to come out of this 1 hour. We need displacement, market structure shift, okay, so here we have this swing low in here. So we have this huge displacement. We get one sign here with candle closure, and then another swing low with this huge displacement candle in here. So displacement. We also get a change in the state of delivery. This becomes an inversion fair value gap. And we also get another swing low broken here. So we're still within our time window. $9.50 to 10.10. Now we're just waiting for price to come back into. We have this 1 minute fair value gap, bearish fair value gap. So price returns back up into both here. So you could be a seller. We also have SMT here with ES. If you notice, ES has taken these highs where NQ has failed to take that high. So we have SMT here with ES. This SMT with ES. So we know that this high should be safe in here, and we can target low-hanging fruit here, take partials there, or target this swing low, this liquidity in here. All of this is liquidity, engineered all in here. Okay, So move price forward. Tap the 1 minute bearish gap one more time. Right there. By 10:20, 10:30, before 10:30, 1 to almost 1 to 6 there. So here we can see on Tuesday that we had bounced out of this 4-hour bullish fair value gap, and we have this new week opening gap. The 1 hour time frame has shifted market structure when we displaced higher here in the afternoon on Monday, and then overnight we used this 1 hour gap to climb higher. If you notice this bearish gap overnight here, we've started to close candle bodies above multiple times. So the order flow is clearly bullish. So if we drop down to our 1 minute time frame, we can see we have this 15-minute that we have been coming out of since the London session. We have this retracement into the New York session. So we know that typically into New York we'll get a retracement before a continuation. So our target in drawn liquidity is going to be Friday's high. Okay. If we look at yesterday's PM session, this can also be a short-term draw on liquidity here. Previous day's PM high. So our specific time, we're looking for 9:50 to 10:10 in here. Okay, so let's see how the price reacts in here. So already we're starting to trade away. We want to see how we react to the 9:30 opening. So 9:30 open here. The opening at 9:30 is usually a fake out. So we have our Judas swing lower, take out the PM's session's high. Now we're starting to aggressively trade higher here. So price has an unwillingness to take out any of this liquidity. We have a short-term consolidation, manipulation lower to take out, induce a little bit of selling, and then distribution higher. So we know that our draw is Friday's high. We already have a higher time frame market structure shift higher. So now we're just looking for reasons to be able to enter during this 9:50 window. Okay. So we have this very big bullish gap. The 1 minute bullish gap in here. And we have this overlapping order block in here. So we want to measure this here. And we want it to respect with the candle bodies at least 50% of this order block. So it would be CE of the order block. So we get a nice rejection off of there. We're at equilibrium of this 1 minute. So we could go ahead, since we have a lot of confirmations in here, enter. Oh, that's the wrong position. we want a long. We can take in here, stops below this low, and we're going to target Friday's high. Nice movement higher. Okay, we now have this 1 minute bullish fair value gap in here. So we can move this one out of the way. We can reduce our risk in here to the top of the order block, or a little bit lower. We'll go 12 points here. So now our take profit is a almost 1 to 6 here. So far, respecting in here. Another small fair value gap in here. So once we start to take these highs again, probably take some partials off here. Go break even, or even put your stop loss in profit here. And there you go. Okay. Same time frame. 9:50 to 10:10. Respect to this order block in here. 1 minute fair value gap. Friday's high is the draw. Okay. So now we're going to look at a PM example. And for the PM session, I'm going to give you guys some extra sauce. Okay. For the PM time, you're going to want to look at 2:45 to 3:15. Okay. So this is going to extend that window by 5 minutes on each side. And I want you guys, don't just take my word for it. Go in your charts, back test this, find more examples. But we're going to go over this example today, which was a trade that I took myself. So again, we have our higher time frame, 15-minute fair value gap. Okay, so you need a higher time frame PD array. And notice how we're starting to reject away here, but we need time. Okay, time is the most important element. So although it's running, it feels like it's running away, we want to wait for time and price to align. If you notice, price comes right back up. Okay, and notice what we're doing here. If I move this 15-minute out of the way, we can see that we're rejecting out of the 15-minute. But what are we tapping and moving out of? Well, we have this 1 minute fair value gap right in here that we can use. Now, it's overlapping a little bit. Why? Well, because we have this order block. These two up close candles right in here is your bearish order block. Okay? So if I were to take this and pull a box around it, okay, we'll make it orange. We can see that price is tapping just about, give or take, depending on how you draw this box, 50% of the order block. So again, we can measure CE of the order block there. We also have a bearish 1 minute fair value gap, and now we're about to hit 245. Okay, so price opens, comes back up, hits the bottom of that gap. This is where you can sell short. Okay, let's see, is there any SMT here? Looking. Sometimes it's very sneaky in here, so you gotta look hard. So it's very subtle, but if you notice, this 238 candle took out, or this 240 candle took out the 238 candle. Okay, whereas on ES, we did not take out this candle right in here. Okay, so you have SMT there. Now, what can we target? Well, low-hanging fruit. Right here. Or we have relative equal lows nested right here in this form of sell-side liquidity. Okay. This is also a market maker sell model. We have a small original consolidation in here. Buy side of the curve. And now we're creating the sell side of the curve. Okay. And this is something I teach over and over again in my boot camp. So if you're interested in getting the boot camp, go ahead and click the link below. It's going to be open all year. So we're going to be taking in the next round of people for May. So get in there. It's going to be the closest thing to working with me one-on-one without the price tag. Okay. So we meet weekly. There's weekly lectures, weekly lives. You're going to get extra days with me. I'm there to answer all your questions one-on-one pretty much in a group setting. So if that's something you're really interested in and you really want the hands-on approach to finding consistency and learning how to trade, we trade the closest thing there is to trading just like ICT himself. So click the link below and come join us. So that being said, you can get in here, bottom of this gap in here. Okay. So what else do we have in here? Well, we have this high, low, higher high. Okay. So this low in here is also a breaker there. And we have another one. High. Oops. Low. Higher high. So we have another breaker in here. Okay. So now we can, if we take the breaker, which is this candle in here, move that over. We also have that in confluence. Okay. So first target there. Second target, the original consolidation low. Okay. We're inside of our 245 to 315 macro. Price comes back up. It taps the bottom of the breaker. And then we move with speed aggressively right to sell side. Okay. Random? I think not. All right. So don't forget to hit that like, comment, subscribe, and I'll catch you guys later. Until next time, trade safe.